Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday afternoon. Great to have your company. I'm Juliette Sarli. Let's have a look at where the local market is finishing. The CBO 200 there, pretty flat. It has been a bit of an interesting day's trade though. We had some weakness on the start, US forces launching these fresh strikes on Iran, reigniting the conflict that of course has been happening for more than 3 months. But BHP and energy stocks have started to push our market higher. Having a look at where the S&P ASX 200 is as we head into match off. Well, it is down by 10 points or 0.1% to 8,642 points. Still a lot of weakness in tech stocks, although I will say this euphoria over SpaceX is very much igniting, pardon the pun, all that thematic around AI and how you sort of get exposure to space as well. Financial stocks under pressure, but energy rocketing on that firmer oil price. Let's get then into the themes of the day, and it really has been about this Thursday trepidation. And then of course we talked about salary stability because we had the wages growth data coming through out today as well. Australian wages rising by 0.8% in May, so maintaining that somewhat consistent growth that we have seen, this according to the latest CBA wage and labour insights data. And then of course to the moon, because everyone you speak to on the street, we're talking about here in the office, I'm talking about it with my friends on WhatsApp chats. Are you getting involved in SpaceX? Have you missed the boat? Is it the silliest IPO we've ever seen or the biggest? It certainly is going to be the biggest in terms of value. Tens of thousands of Australians, according to the AFR, bidding for shares. The late mail, the AFR reports when books closed on Wednesday night, was that the lead retail broker, CommSec, had more than 30,000 different accounts bidding for the stock. I know one person personally who was on hold for 3 hours trying to get an international share trading account. And, you know, this is just unheard of in anything that we have seen in terms of IPOs over the past decade, if not ever. And Australian investors, according to Beta Shares, also returning to tech-focused ETFs due to SpaceX. Beta Shares reporting strong inflows into the sector. I'm going to be speaking about this tomorrow at 11 a.m. with Hugh Lamb from Beta Shares. And on the back of that and this really strong demand, not only into SpaceX, into AI, I should say, but ETFs in general, the Australian ETF industry reached a record $364 billion in funds under management. So the first time that it's gone past $350 billion. All right, let's get into the sectors on the equity market today, kicking it off with tech shares, which, as I mentioned, are weaker today. WiseTech down by around 3.2%, Tech One off by 1.2%. We're also closely looking at what the banks are doing, mostly weaker. Gosh, CBA getting back towards that 155 handle, down 2.5% today. Westpac, that was an interesting story, not related necessarily to shares in the bank, but overall the budget changes. So the head of Westpac's consumer banking, Carolyn McCann, telling the AFR that the bank has seen a pronounced shift in sentiment since the budget was handed down, with Westpac recording a 20% drop in applications for housing investor loans. Also having a look here at what we've been seeing in energy stocks on that firmer oil price. Santos, Woodside, Karoon, all looking very solid. Well, of course, we touched on Westpac there, the mortgage application impacts after those tax changes. Having a look at some of the other corporate stories out there as well. QBE Insurance rising as it appointed Monarch Point Re Chief Executive Christopher Harris as a non-executive director. Lendlease also had a bit of a C-suite announcement. Nick O'Neill, currently head of Australian Real Assets at the pension fund Australian Super, will become the CEO. And Super Retail Group unveiling a new 5-year strategy, including expanding its store network from 790 to more than 900 locations by 2031. By contrast, ARB falling after Citi flagged competition woes on that super retail expansion. Northern Star was under pressure. Elliott Investment Management saying the miners board doesn't, quote, understand the magnitude of change required to win back shareholders. And Southern Cross Media is going to cut around 250 to 300 jobs as part of some cost-saving measures. In the small end of town, LTR Pharma securing exclusive US pharmacy rights for its Roxas treatment for ED, sending shares up by more than 20%. And a really interesting story from XTM Connect to partner with Resi Ventures to develop data centres in regional Australia. Shares up 25%. And I spoke to the company's CEO, Mohan Jesudasan. You can catch that, of course, on ausbiz.com.au. Well, let's now welcome to the COB Clifford Bennett from PropX24. And Cliff, you are quite worried about this ongoing uncertainty in the Middle East.
Well, yes, it does seem to be a trend that is reasonably reliable, unfortunately, at this point. I mean, even since the headlines you mentioned at the start of your program, there's been yet another round of Iranian retaliation, but it sounds like the previous day's reports because it's further attacks on US bases in Bahrain, Jordan, Kuwait, and I believe also Qatar. So I think the situation is, and that's since the US said they'd now completed their responses or their retaliations. So at the moment, it's a never-ending escalation. The Iranians have also come out in the last sort of 12 to 18 hours to be very, very clear that there was no phone call with President Trump, because apparently he alluded to such a call, and there were no high-level negotiations going on at this stage. So I don't think there is a lot happening in terms of peace talks. It's more both sides now see the impasse as, see the gulf between themselves, each other as an impasse, and they're just both posturing now. I would suggest to viewers, though, and not wanting to be too negative or anything, but the nature of the US strikes against Iran, which they say are a response to aggressive behavior by Iran, the nature of those attacks, those strikes, really is what you would be doing if you were considering putting ground troops in or gaining control from land-based positions of part of the Strait of Hormuz. So I think there could be a bigger strategic plan in the background, which they may not ever fully implement. But when there is a flare-up in hostilities, they seem to be behaving in a way that is congruent with that kind of scenario. And we've just seen Iran close the strait again. I mean, both sides, the US certainly was, and Iran was too, were letting through some tankers. I think it had built up to about 10 to 15% of pre-war supply levels. But Iran has just closed that down given the latest US strikes on Iran. So Iran's saying the strait is completely closed again, and there are reports that 2 vessels have been fired on or hit already since Iran announced that. Just makes the whole situation problematic. But I think probably what most investors are accepting now, which was always my forecast from before the war started, I said this would be a war that lasts many months, is that this is going to be a prolonged affair. What on the good side of this in terms of the global economy is that people have had time, producers, shippers have had time to find alternate supplies or increase supply from other established outlets in terms of oil. And so we're now down to only about 10 to 12% of the global oil supply being reduced, but that is still significant, and the world will still go through the global economy will still go through some pain in adjusting to those lower levels. I'd suggest, though that reduction of 10% and more will prevail through the rest of this year and perhaps into 2027. So there is going to be a global economic impact. We've just seen inflation accelerate in the United States, and I think there is going to be more of that. So it's sort of like COVID was this sudden tsunami of inflation, whereas in this situation, this geopolitical situation, it's more a tsunami that's just relentless but slow moving. So I think the inflationary forces will continue to build, and let's hope central banks respond appropriately.
Indeed. All right. Well, we've got an RBA meeting next week as well, Cliff. But I want to get your thoughts on SpaceX. This IPO more than 4 times oversubscribed. It's either going to be the biggest thing since sliced bread or potentially a flop. What does Clifford Bennett think?
I think it's going to be both. I think, we've all wanted to own part of SpaceX for many years, really. For those, who are close to markets, always saw SpaceX as a wonderful thing, a wonderful stock if you could get any, but we're only having the IPO now. The whole world, it's a float for the whole world. The whole world's excited about space. It's got to be one of the easiest marketing exercises of any float in the history of the world. So we all want to get involved with space. The problem with that is, of course, is that euphoria is overdone in the beginning. I would certainly be looking to buy the dip after the float, after the initial offering and floating of the stock on the exchange. I think give it a few weeks, see where it's at there. That might even give you a better buying opportunity. That said, there is a risk. There is probably a big risk to that sort of idea, and that is that SpaceX takes off like a rocket. I'm sure I'm not the first person to say that. So it's oversubscribed. People will want to buy it on the day, but then there might be some profit takers as well. However, I can't see the profit takers in the long run overwhelming those who will still be left without the stock that they want. So I think, yes, it will be a good long-term buy.
Yeah, okay, well that's really interesting because so many people are saying not, although I have noticed a few people changing their tune in the last couple of days. Also, all right, well let's just do full circle and kind of go back to the interest rate thesis because we do have the RBA next week. Clifford, not expecting any change. I know that you always sort of have some quite, what should I say, strong views on what the central bank and the governor should be doing. What would you be suggesting Michelle Bullock gets asked next week?
Well, I'm not, I mean, I'd like to see her act in a way that she doesn't have to be asked the difficult questions, and that is to keep interest rates where they are. They should be cut. Like the correct monetary policy response to this type of inflation, where the private sector is already on its knees, where the housing sector is suddenly looking a little bit, the property sector a little bit vulnerable, that interest rates should be cut. However, I can't see them being wise enough to do that. But if they could be just a little bit wise and keep rates on hold, I think that's the most likely scenario because, I mean, even for the RBA, they must be able to recognize there's never been greater uncertainties around the domestic economy and the external situation at the same time. There's a lot of significant changes happening within the economy. There has been a slowdown in various sectors of the economy. And at the same time, you have this very uncertain geopolitical war, storm happening internationally that is going to drive up inflation, but it's not an inflation the RBA can control or influence. So it should be focused on the other side of the ledger, which is supporting a strong economy and smoothing out the roller coaster that the RBA's contributed to really since COVID. And that would be to keep rates on hold, to reassure the public and businesses. I would like to see a cut, but I don't think I will be getting that as a present. But I think on hold, they will have to be given the high levels of uncertainty, both domestically and internationally.
Yeah, I don't think you're going to get it, but we can dream as mortgage holders, can't we, Clifford? Great to chat. See you again soon. Thank you. Clifford Bennett there from PropX. Getting back to equities, the stock of the day was Super Retail Group. Andrew spoke to our experts, Mark Gardner from MPC Markets, Andrew Coleman from Team Invest.
You can now buy them on a PE of 12.5. So to Mark's comment before about as a value investor, things are starting to look pretty rosy. 12.5 may not be the kind of super exciting for a retailer. You can often get them, high single digits, very low double digits, but it's getting right back towards the trading range where a value investor looking at a business with this kind of track record should start to get quite excited. I'm going to say a hold for today because I think you'll get it at a better price, and that's the purpose of this show. But 12.5 overall is not a bad PE to be paying for a company that grows earnings consistently faster than inflation and dominates its niche.
Without the macro lens, I'd probably give this a buy. But mildly concerning. It was a lot of. It's a good old-fashioned marketing department got a hold of that rebrand or the 5-year plan thing. I think someone may have run that through Claude or something, because there's a lot of buzzwords there, but I don't normally like that hearing those. But I mean, it's very uncharacteristic of a super retail group. It's a quality business. I do agree as well with JB Hi-Fi, but at the moment I wouldn't be putting new cash into either.
Should we have a look at the market leaders today? Kicking it off with Tuas, which had a good session. Lend-Lease, we talked about a C-suite change there. A little bit of love for the lithium players, CSL in the healthcare space, and Tabcorp. And that's an interesting one because we've had a couple of guests, including David Buckland from Montgomery Investment Management, suggesting to me that there is a little bit more love for some of these consumer discretionary stocks. He is also of the view, like Clifford, that maybe we do need to see rate cuts sometime soon. Let's have a look at the laggards. Alcoa there down by 8%, Ora Banda Mining, Nickel Industries, Generation Development, and Xero. In the small end of town, these companies had a good session, including Clevo Rewards and Novonix, while to the downside, we saw weakness coming through from Eleanor Investments and EML Payments. Tonight, we have coming up the EU interest rate decision. Had a great chat with Nick Twidale from ATFX about that. You can find that online. Also US PPI or producer price inflation for May. And there we are expecting a little bit of growth. Looking ahead tomorrow, we've got Dyno Nobel and ALS going ex-div, and Japan April industrial production. But I think the key thing, of course, is going to be the finalisation of the SpaceX IPO, Australian retail investors finding out whether or not they were successful ahead of the launch, which will be, of course, the 11th US time, which will be, I think the 12th US time. So we'll find out that, of course, on the weekend. All right, SIBO 200 index is pretty flat there. It is looking unchanged, whereas the S&P ASX 200 index closed down 20 points, 0.2%, 8,633 points. Okay, we'll do it all again tomorrow for the final trading day of the week. We'll catch you from 9:45 a.m. Eastern.